Hi, everyone. My name is Alan McLaren. I am the co-founder of STRATA Originals. And on this podcast, we interview originals. As the name implies, originals are people who stand out by the lessons and stories that they share to help us all learn and grow as leaders and as humans. It's my great pleasure to introduce my friend and a legend in the financial services markets, Satish Rai. I typically don't read out full bios. I had no choice on this one. So give me a minute to read this out for all of you. Satish is a senior global financial services executive, previously the chief investment officer at OMERS, where he was overseeing all asset classes to the tune of $130 billion in net assets. I said B, that was a B, yes. Um, Prior to joining OMERS in January 2015, he served as a CIO at TD Asset Management, where he managed a portfolio of, ready for this, 250 billion. A little more than I have in my bank account, but that's okay. We'll go over there. Right now, he serves on a number of boards: Brookfield Asset Management, Fairfax India, Richcraft Homes, and Second Harvest. He has advisory roles at a number of leading firms. In addition to that, he's recently published a financial literacy book for investors called Lessons Learned, which was phenomenal, by the way. At TD Bank, he chaired the Committee of the Advancement of Visible Minorities in Leadership Roles and is a Diversity Leadership Council member. He's a past member of respective boards of the University of Waterloo, the Michael Garron Hospital Foundation, Toronto Global and Women in Capital Markets. He holds a Bachelor of Mathematics from the University of Waterloo and a CFA, and is a member of YPO, and that's where we know each other. He was recognized a few years ago as a Canada's top 40 under 40 industry leaders, and in 2006 received the Alumni Achievement Medal. Dude, I'm exhausted. I don't know where to go. Satish, so happy that you're joining us. Thank you.
It's great to be talking to you.
Listen, my friend, we all know that, so I want to start with an icebreaker. We always start with kind of a fun question, but this is a serious question too. Trust is fundamental, as we all know, in all business dealings, but especially in the investment world. How have you built trust both personally and professionally in the work that you've done?
Alan, you're right. In the financial services industry, where you're asking people to let you as an individual invest their hard-earned capital, trust matters more than anything else. And trust is built over decades and decades. And it's lost in minutes. And we've seen that from corporations, individuals around the world, where they built this amazing brand and then you lose it. What I found is a couple of things. First of all, you have to be consistent in your messaging. You have to be honest. And if you do well for your clients, then you will do well. The biggest mistake people make is they try to do well for themselves and then return hoping the clients do well. So we have to change that equation. And there isn't a single client I've had who we did well for, who didn't mind us being looked after. But if you look after yourself first, you never get that. The other thing I tell you is that one real life example was 2008 when we had the crisis. We went out of our way to over communicate consistently with every single client, every single opportunity we had. And we were in tough times. There's a lot of challenges took place. And we were transparent and honest about the challenges that are taking place. So I would say it's more important to communicate during tough times than it is during good times. But also the main thing is, if you do really good things for your clients, good things will happen to you. And if you have that equation, instead of working about yourself first, and then your clients, you'll do very well in this industry.
It's interesting to build on that. So that was your philosophy. How do you make sure that the culture, because a lot of people that work with you to help with that, how do you ensure that you build a culture of that attitude?
Well, I think it's the same thing, where culture comes from the very top and the messages that you give. And so it wasn't just me, the whole team in all the organizations that I've worked for, we went out of our way to service our customers, looking after our customers. We went out of our way to communicate. So you're right. Now, as the organization grow, it gets harder and harder. And I'll tell you, my view is cultural starts at the very top and permeates down. And you don't need a book. You don't need buzzwords. You need to see how you behave every single day when you show up to work. And people pick up on that very quickly. And so I actually felt the organizations I've worked for, the people surrounding us generally felt the same way. And we've actually had very strong success in both organizations that I spent a lot of time at.
Well, you likely hire that as well, don't you?
You know what? There's a couple of comments about very, very smart people that make a lot of money, but that are not aligned are probably the most dangerous people in your organization.
Yeah.
The people that, even if they do average work, but they're completely aligned, you want those people. Obviously, the people that are superstars and aligned, you want to look after them exceptionally well. But you're right. The most important people, the most dangerous people in an organization are very smart people that do exceptionally well, but are not culturally aligned, because you have to worry about them the most.
It's funny. I would have never, I mean, the financial markets don't have a great brand in terms of what you just described. And
Yeah.
so it's nice to hear that someone who has, dealt with billions of dollars of other people's money and listening, obviously with OMERS dealing with, pensioners and stuff like that. It's a big responsibility, isn't it, also?
Yeah. So first of all, so if you look at TD Bank, we had millions of customers that relied on ours in retirement. At OMERS, we had 600,000 pensioners there that were looking after their pensions. So if you walk in the door and say, our job is to provide secure pensions for people, or our job is to provide secure savings for people, that mindset is absolutely critical. And if you start off every single day understanding what you're there for and who you're working for, I think everything else comes a lot easier. If you start in the saying, I'm here in the financial service industry to make a ton of money for myself, I think you'll fail.
I love it. That's beautiful. And that's why you've been successful. So thank you for sharing that. So let's explore the backstory. You didn't just show up running a $250 billion portfolio. So tell me about the backstory. Where did you come from? How did you get here?
So, Alan, it's a bit of a back and forth, but let me first of all say how lucky and fortunate I have been in my career. I was born in India, old part of India called Chandni Chowk, which is old Delhi. My father, in the 60s, decided to immigrate to Canada. He got his law degree here at Oxford Hall, and then 4 years later, he brought the rest of the family over. So we came over to Ottawa, very low means for us. We worked our butts off the whole time. I went to University of Waterloo, and Laurier did that program where it's math, computers, and business. And really, I was a computer programmer, right? But when I was 12 years old, I've been working since I was 12. I was trying to trade in silver. By the time I got to university, I was using mainframes to trade stocks. And then we had a stock brokerage account. This is 1981, 1982. I lost so much money you can't even imagine, betting my tuition dollars way more than you realize. So I didn't know anything about the investment world. I just knew I was trying to make a living. I was trying to put myself through school. We trade. I trade everything. We had a bit of investment club. But it was real dollars. It wasn't fake dollars. It was real dollars. And then and I was doing all kinds of things, exotic things, option trading, straddles and puts and calls, and like, quite frankly, getting the best education possible by losing all kinds of money and not really having enough money for food at university because I lost in the stock market. So I got a job at TD Bank as a computer programmer. I was working in the back office, and I didn't know anything about the investment world. I didn't know what it was like. I didn't know anything about it. And one day I literally walked over to the investment group, knocked on the door, and I had a bit of a stuttering problem at the time. And it took me probably minutes to say the following words. My name is Satish Rai. I work in the back office in technology. You don't know who I am, but I like to work here. I'll work 7 days a week, 24 hours a day, and I'll shine your shoes and get your coffee. That was my line. And I basically got hired to do jack of all trades in that area. And I was very fortunate. Very quickly at TD Bank, I was given roles beyond technology. And my first technology role was getting them an IBM AT small computer. And they thought it was a genius because nobody had computers back then. And I could actually run spreadsheets, and they thought, wow, this is brilliant. So I was very fortunate. I was able to do securities lending, equity trading, risk arbitrage. I was a quantitative analyst, equity analyst. And then by 1989, by the time I was 26, old man, by the time I was 26, I was asked to run the fixed income department. I didn't even know what a bond was when they asked me to do that. Wow. And we're very fortunate. We took what was average performance to top of the line performance very quickly. like almost immediately. And they were asking me to step in to do fixed income while they hired somebody, and they never hired anybody, and they kept doing that. And anytime TD Bank said, "Hey, will you do this?" I said yes. Will you help with New York? I said yes. Will you help with London? I said yes. Will you go to India and see if there's a partnership opportunity? I said yes. Will you go to China to see if there's a partnership opportunity? I said yes. So I said yes to every opportunity because I kept wanting to learn and learn and learn and learn and learn. And I want to be very clear. I've made more mistakes in investments and people and talent and business strategies that you can possibly imagine. But I've been able to self-learn and self-correct and self-learn and self-correct. And so my biggest success today comes from the buckets and buckets of mistakes I've made over my career, and how I've adopted from those mistakes. So and then we grew the business. We had exceptional results. The mutual fund business was virtually zero when we started. It ended up being about $250 billion. And I turned 50, and I love my job at TD Bank. But I woke up one day saying, geez, do I want to work at one institution for 40 years or 50 years and then walk away? And it didn't feel right to me. So I walked away from my job at TD Bank. No severance, nothing. I just walked away. I gave them a year's notice. And then I was fortunate enough to apply at OMERS when they're looking for a CIO for capital markets. Came in. It was a very challenging environment. They had a business strategy that the board wasn't comfortable with, but we've over the years, lots of us, we've revamped it. And then I was asked to take on additional roles to be the CIO at OMERS globally for all asset classes. And again, I couldn't have done the CIO job at OMERS if I hadn't done all the other jobs at TD Bank. And I tell people, Alan, the biggest thing is that people stop learning, and you have to keep learning new skills, keep meeting new people. And so I've been very fortunate. I've had a very modest beginning, exceptionally modest, very challenging first 20 years of my life. Great. Second 20 years was very solid. And the last 20 years has been absolutely amazing. And so I've been very fortunate on many fronts.
Well, all of that happened when you met me. So that's the last 20 years.
That's right.
So let's talk about a couple of things that you shared here. The first thing is, let's talk about comfort zone. You don't seem to have one, do you? Or you like to dive into places that, you're actually building the plane while you're flying it. Like, tell me about that attitude. Where did that come from, that skill to dive into something you didn't know anything about?
Well, by the way, your observations are right, but actually comes from fear. It comes from fear as a child of not having the means to eat, not having the means to put roof on your table, things. So this relentless desire to learn, to be able to live life. And so that was just such a important part where, if you didn't work hard, when you're 14, 15, 16, 17 years old, you went to school, but you also worked. If you didn't work hard, you didn't get to eat. If you went to, when I went to Waterloo, I got co-op jobs and to pay for tuition. If I didn't get co-op jobs, I didn't pay for tuition. So I think the first part is fear about just everyday life. The second is I use the word I just want to learn everything I can and a brand new skill set. So what you find with great leaders, if you look at great organizations, the greatest leaders are not necessarily the best tech people or the best finance people. They're great leaders that are out there who have broad experiences. Yes. So I've always chased the broadest possible experiences, and I never had confidence that I could do those jobs. Like when I got the jobs, I went home going, "Oh my God, what have I done? I've just got this new role, this new responsibility," which I don't know anything about. But I knew I could. I would just figure it out. I worked my butt off. I worked hard, and wherever I could, I surrounded myself with great people, and we drove into it. And so I would say that I don't mind being outside the comfort zone because I've done it for 6 years of my life, let's say. Obviously, my father, who was in India, in a part where there's no water, no electricity, nothing, somehow found his way to come to Canada and bring his family forward. So he also probably had that, vision to be outside the comfort zone. So I'm going to take this to one step further. I would say the biggest issue that I see with young people today is that they have a vertical view of what their career should be. So here's what I'm going to do. I'm going to come out of school. I'm going to do this, and I'm going to drive up straight up. It just doesn't work that way. And so once you recognize that your career is a snakes and ladders game, like you're going up, you're going sideways, you're going up, you're going down, you're going up, and that's just all part of life. And then eventually you'll get stuff that happens. And I didn't ever say I want to be the CIO at OMERS or CIO at TD Bank. I just said I want to be a great investor, great financial services. So whatever skill sets I could learn around that, I kept pursuing.
That's awesome. It's a great lesson for youth who always want to have everything perfect before they get, and I'm not trying to generalize, but it's not linear, as you suggested. Life is not linear, careers are not linear. Curiosity is what you've kept up, right? You've kept up being curious.
Yeah, Alan, I doubt that I was fully qualified for any role that I took. Like if you said to me, you need 100 things to have job X or 100 things to have job Y, I don't think I ever had those skill sets, but I learned them.
Yeah.
And I think maybe that's where my very boss has said, okay, he adopted for the last 7 times, let's do it one more time. And we know he'll adopt, and he'll adopt again, and he'll adopt again. And I would say that curiosity, constant learning is really critical.
Interesting. So as you were going through your life at TD and at OMERS, any mentors, role models along the line that had some influence?
Yeah. Yeah, so and they all came in different forms and different sizes, and I've had some incredible leaders at TD Bank, incredible leaders at OMERS. Some provided me thought leadership on how to be a leader. Some provided me thought leadership on how to invest money. Some provided me thought leader how to behave in a boardroom. And I didn't necessarily sit down with somebody on a weekly basis or a monthly basis, but I was very fortunate. And I'll tell you, the fortunate thing is really people telling you when you're screwing up and what's how to move forward. And I can remember one incident when I was in the boardroom at TD Bank, and I was making some conversations, and this executive sitting next to me under the table grabbed my arm and just started squeezing. And he just, and I realized I needed to shut up. I needed to shut up in the boardroom. And then he took over and from that conversation, and he was brilliant at it, absolutely brilliant. And we afterwards he goes, you have to be very conscious of your words in a boardroom. And he so it's small things like that. And there's hundreds and hundreds of examples like that. One of my investment sports I had when I was at TD Bank, this is like in 1990, he'd make me sit outside his office till 9, 10, 11, 12 at night. And then at 9, 10 o'clock, I'd be sitting outside his office and I wouldn't leave. I think he was testing me to see if I'd go home, but I would not leave. I'd just sit there. And then maybe at 10 o'clock, he'd put a little note under his office, and I would pick up the note and read it. And there's some sort of nugget in there. And then at 10 o'clock, I'd go home, right? But so that's why I say mentors or advice comes in various different ways. And I don't think I've had somebody who sat down with me for a weekly basis, but I've had so many great people. And at TD Bank, sort of OMERS, we had some great leaders there who provided how to think through dealing with unions, how to think through dealing with big issues when it comes to pensions and things that I would not have ever really experienced that. So I would say I've been very fortunate to have lots of great people around me to provide me great advice.
So thank you for that. And tell me about what would be the biggest promotion you got? Was it when you left to OMERS or was it at TD? And how did you feel when that happened? Did they come to you or did you push to get that job?
Well, I was promoted continuously at TD Bank, and I became CIO at whatever young age it was. And so that kind of felt like a natural thing. But again, at every step of the way, the organization was supporting me and they were terrific at it. But I would say that being able to get that job at OMERS was really important because it validated third party thinking outside of TD Bank, which, so that's like, seeing yourself grow up around you, but then third party person. And when OMERS was looking in 1984, I guess, for a CIO for capital markets, I got contacted by them when a press release went out that I was leaving TD Bank. And I'm sure I went through competition with lots and lots of other people. Went through lots of rounds of interviews, lots of conversations, lots of discussions. And people forget like how serious these roles are. So it's not just, can you make money, but can you make money? Can I get along with you? Can you put the stakeholders in the front lens for yourself? So I'd say that was probably a big move. And then finally, a bunch of years ago, when they said, Satish, you're the CIO for capital markets, but we have private equity infrastructure, this whole other business lines that we have. We like you to oversee everything around the world. So that also validated it. So I think I've had internal support and then the external support, that's been there, and all been very blessed, right? Like, I mean, whether it's lucky, the right time, the right place, you can be the most brilliant person, but if you have the wrong timing, it just doesn't work. So I've kind of had good timing, good luck, and also probably pretty decent performance, which is all kind of, come together.
So you strike me as being incredibly grateful for the opportunities that I would argue you created yourself. Do you practice being grateful? Is it something you think about consciously?
Alan, so I do something every morning. It takes 10 seconds, and I'm going to share it with your audience. And because we forget in our society how lucky we are. So whether you're, there's let's say 7, 8 billion people in the world, most of them do not have the education, the healthcare, the access to safe drinking water. There's so many things we as Canadians have that we forget, and we end up being negative around everything. But if you step back and go, my gosh, we are so much better off than most of the world. And we also have safety of physical violence because, we're not in war-torn, areas. We're not in the Middle East. We're not in, some of the parts of the world which have had tremendous amount of violence and death. So once you start with that as your base and say, man, we're already in the top X% of, the world, your day changes. So I have this little trick. It takes 10 seconds. So when I get up in the morning, I get out of bed and I put my feet on the ground and I rub my hands together and just rub them for 10 seconds. So I just rub my hands like this because a lot of nerve endings. And I simply say, what if a wonderful day today will be? Wow. That's it. And that's my morning routine for 10 seconds. And it's a wonderful day. You can make up your own saying. And as soon as you start off by saying, today's going to be a wonderful day, and the worst days that we have today is better than many people's best days around the world. And that automatically gives you a lens of how to approach everyday life and troubles. I want to be clear. I have lots of troubles, lots of, issues to kind of, speed bumps to go over. But again, if you can put that in the context of how we are positioned, even if you think about society the last thousands of years, think about, we're living a life better than the kings did 100 years ago, right? Like, or 200 years ago. We have, hot water on demand only existed, 50, 60, 70 years ago. Medicine and technology. So we have more comforts in society today than you can possibly imagine. What we don't have today is peace of mind, right? We have more anxiety, we have more concerns, we have more mental health issues, but we have more comforts than we've ever had. So isn't it a shame that we've got more comforts, but we haven't translated that into better peace of mind? And so, something you can do just to recognize how fortunate we are, I think we'll do very well.
Great tip. I think, and it's so simple. It's not, I have to meditate for 5 minutes. I have to take 10 things and think about grateful. And you're grateful every day because your attitude and approaching the day is what matters, because it's you in the day all the time.
Yeah.
So it's a wonderful tip. I will start that right now. Hold on. Give me 10 seconds. It's going to be a great rest of the podcast. Yeah, so far. Listen, you know the business that I'm in, right? I'm in the personal branding space, which is really about reputation, right? Now, you and I've talked before as friends. It's not something you've ever focused on intentionally in building your personal brand, but you ultimately did because everybody has a personal brand. However, through your high profile work, you've fostered a really good reputation. How did you do that?
Yeah, I think there's two or three separate things. I did not do really any social media at all, like very diminished amount. But I spent enormous amount of time with clients, more than you can possibly imagine. We spend time with clients. We time with stakeholders, podcasts for clients, interviews for clients. So anything we could do for clients, we were relentless and forceful on, and how to interact with them. And that over many years built up our brand and reputation. We sold mutual funds at TD Bank through the advisor channels, which are very critical of a lot of things that goes on. So it was quite frankly, from my point of view, blocking and tackling, like going to Halifax, going to Winnipeg, going to Newfoundland, going to all parts of Canada, not once, but on a continuous basis, and blocking and tackling and building, and then reinforcing that with great client communication when you weren't with them. Every Friday, when in the last 5 years of my career at TD Bank, I did a phone call. It was a line where I just talked about the markets, and people dialed in, and they could get whatever the update. So they heard from me on a weekly basis.
Mhm.
So we had our own TV studio at TD Bank where we're doing constant shows. So from my point of view, it was the consistency of messaging, the consistency of contact. It was a medium that we wanted to choose. We had TD Bank still has a show called Money Talk. I was on Money Talk. So anything that was directly client related, that was the first thing. The second thing, when you talk about personal, is that I personally went out of my way to do things that I found a lot of joy that wasn't in the investment world. So I was on the University of Waterloo board. I was the first male on Women in Capital Markets. I was on the Toronto, Michael Graham's foundation board. I was on Toronto Global board. So, and then what was really interesting is those things had nothing to do with investing, right? The University of Waterloo had nothing to do with investing. It was a board member, and you learned, wow, you're dealing with the mayor, you're dealing with professors, you're dealing with student issues, and you get to learn a different perspective on that, and you get to express your voice. Toronto Global, trying to bring businesses into Canada. So it was just that on constant interactions with people that had nothing to do with the investment world.
Yeah.
And I have this tip that I give to students. I said, whatever you do, build your network outside your network. And they go, what does that mean? And so if you're a stock analyst and you're covering, bank stocks or whatever, what happens is those guys build up their network by other analysts. Well, that's just like adding. There's no diversification in that. So I went out of my way, and I enjoyed it. I want to be clear, I enjoyed it to build my network and impact outside. So when Women in Capital Markets needed help, I put up my hand. When Women in Capital Markets said, "Hey, Satish, would you present at a women's event of how to promote women issues in the financial services?" So I spoke in front of 200 women by putting up my hand, and like that was high risk, kind of thing.
I bet.
So that was high risk. So I think it was not just the financial industry, but I took that into the other parts of my life, and today I'm on the board of Second Harvest, and it gives me so much gratitude to be on that board. We're trying to provide 90 million pounds of food are rescued, right? This is stuff that was going to be thrown away. This is rescued and donated. And I've gone into trucks and occasionally delivered food with the truck drivers, and then you get that perspective. So I would say the reputation of the brand was living every single day, not just in your core business, but in around the businesses also, to build the widest possible distribution. So I chose that as my mechanism because I felt it was more targeted to my clients and what I wanted to do. I chose not to do social media for a variety of reasons, and it seems to have worked for me.
Yeah, and I think it's a beautiful lesson for everybody because the lessons can be extrapolated to those who can do social media. In your world, it gets more complicated because you got big stakeholders, right? You're not right.
Yeah.
It's a big challenge, and you don't want to open up that floodgate of misinformation and stuff like that. But the lessons taking from that is intentionality matters. If I were to take one lesson from that, your target audience and outside your target audience, which ultimately means your personal brand, right? Because it's when people talk about you, when, as we always say, your personal brand shows up in the room before you do, right? They know
Yeah.
who you are when you show up, and it stays there when you leave. And so what you've done is intentionally through physicality and putting up your hand, built your personal brand in a good way. And the work we do help people think about that by using social media as an additional lever as well. Lovely. I
And,
love
and, and now I'll tell you, I think you mentioned at the start, I decided when I stepped away as CIO at OMERS was to write a financial literacy book. And so there's a whole pile of reasons for that. First of all, I wanted to get back to the community that's been supporting me for the last 10, 20 years. I also felt that that financial literacy is way too complicated for 99% of the people. And every investment book is hundreds of pages of why this is the greatest way to make money. And so thank you for your thing, but lessons learned, which is a picture book on
Yeah.
financial literacy. It's a picture book on financial literacy available for every Canadians, and it's available on my website for free. So I want to make sure it's a free service. There's no profit in here for me. 100% of the proceeds go to charity. But if you think about that as a mechanism, lots of times when I go to an event, I bring 5 or 10 copies and I hand them out. And I don't want anything from anybody, but that in itself creates a brand, right?
Yes.
Or goes, okay, this is what you're about. And I recognize what I did 20, 30, 40 years ago, nobody cares. I recognize what I did a year ago, nobody cares. But what's interesting is I have something today, which is a financial literacy book, which I think is a really powerful message for Canadians of how to save, how to invest, how to think about, financial events is a powerful thing. So your brand doesn't stay static, and what's fascinating is most people's brand is attached to the organization.
Yes.
And once they leave the organization, they're a loss. And so you got a great brand or great opportunity when you can take your personal self from one organization to another or one event to another event. And those are the kind of things that I've been able to do.
Love it. So two more questions, and they're kind of big ones. So you were telling us early on that you gambled a little bit when you were in school with your tuition dollars and stuff like
A
that,
lot, a
right?
lot.
But you obviously have developed more of a strategy in terms of investment. So what general thoughts can you help our audience with, all the things you've learned in the world? What's your strategy personally, professionally for investment?
Yeah, thank you. So in the 80s and early 90s, I was pure out speculating on outcomes, pure out speculating outcomes, pure out that gold was going to go up, pure out that this was going to find gold in Congo or that this technology was going to take place. I was speculating on outcomes. And what I kept learning is that I'd win sometimes, I lose sometimes. I win sometimes, I lose sometimes. And that's not very palatable to me. I don't gamble at all. Like I'm not a gambler in a typical sense. I don't go to blackjack. I don't do any of that kind of stuff. So I start to realize, and I'm a mathematician, that how do I stack the odds in my favor? How do I do that? So what I found is I decided in 1991, 1992 to start thinking, or sorry, this was one of the strategies I started thinking about. I had 100 of them. Was I decided to solve for income instead of return. I decided to solve for creating an income stream that grows faster than inflation. So in the 80s and 90s, I was solving for this, I solved for this, I solved for this, I solved for this. And what resonated with me was instead of thinking about the stock market returns, how do I create income for the rest of my life? And so I started buying dividend paying companies, really high quality companies that build up market share over time. And instead of forecasting what they might do for the next week, next month, I said, will this company pay me a dividend for the rest of my life? Will it grow faster than inflation? Those are very different questions than you might hear in any BNN or CNBC newsletter or any Bloomberg thing, because they're talking about what happens with XYZ today or tomorrow. And so probably 1990s, I had 100% in speculative names. If that's the right terminology, I had 1%. And then I started to gravitate as the 90s went on, more and more as a percentage of my balance sheet became income producing assets, or that kind of things where the business is growing secularly and that earnings growth creates income growth for me. And so this concept about never having to sell a stock. So some of my holdings I've had for 30 years now. I've never sold them because the dividend checks keep going up. And so as long as the dividend checks are going up, I'm actually okay. So that is one area where I really have gravitated towards. So if I give you one advice is get away from speculation, buy great businesses that pick up market share, that pay you a cash flow that grows faster than inflation. And that's not that hard for you to find. Like it's really not that hard. And you just buy them and then buy them every single month for the rest of your life and magic will happen. That's the first thing. The second thing is I've gravitated towards exceptionally strong leaders, and I think that there's this concept of partnership first, structure second, returns third. Most people focus on returns, structure, and then the partner. So I've gravitated towards finding the best partners or the best leaders, and just being with them for a very long period of time. And so if you think about the boards that I'm on, which is Brookfield, Fairfax, Richcraft Homes, these are, and some of the advisory work I'm doing, these are exceptionally strong business leaders who have been there for 20, 30, 40 years, who built incredible brands and they've grown. So I would say the leadership matters incredible amount, more than you realize, more than the returns. So if somebody says the returns are X, I say, okay, what's the leader all about? So if you combine those two things, I think magic can happen over very long periods of time.
Great advice. I'm going to take both of those pieces of advice. Thank you. My last question for you, sir, is if you could instantly solve one major problem facing the industry that you represent right now, what would it be and why? What do you think the biggest problem is?
Well, I go back to the book that I wrote. I think it's way too complicated. This investment industry is not meant to be the most complicated industry in the world. We have, through jargons and structures and structured notes and all that kind of stuff, we have decided to create products that make profits for the businesses and over short periods of time. And how many of these products or businesses are going to be around 5, 10, 15, 20, 30 years from now? I would say that if the industry focused on creating great solutions for long-term success for the clients, I think that'd be it. And I'd say at the same time, the investor has to realize the wealth is created over a very long period of time, not short periods of time. And that is the biggest disconnect, because the industry is trying to solve for your mindset about short-term views, and all these products are short-term, where if you're 30 years old, you're going to retire when you're 60, 65, 70 years old. Why do you need a product that a week from now, like same day options that have popped up? It's the most ridiculous product out there, because you're betting on, at 11 o'clock, what the markets will do by 3 o'clock. Like, it makes no sense to me, because that's not long-term investing. So I would say that if we can come together as an industry, I think a lot more people will have much better retirements. If you think about your investments once we're in holidays, it's a wrong type of investment. Like if you're worried about it, right? And so I would say that if the industry can find a way to focus on long-term wealth creation and make the products really simple, I think the whole society is better off.
It ties back to your comment about anxiety. If your investments are causing you anxiety from a month to month or week to week basis, you're not doing the right things for the long-term wealth, right?
Yeah, absolutely.
I love it. My friend, is there anything I didn't ask you that you wanted to share with our audience, or did you kind of?
Well, first of all, what an absolute privilege, and I simply say, I'm going to reiterate one thing, which I said is we live in a wonderful country. The opportunities here were there. How opportunities we have going forward are extraordinary. If we can capture a balance between economic growth and societal needs, I think we're in a wonderful place. And I feel very optimistic about the future. And I really appreciate you speaking with me.
That's awesome, my friend. Thank you so much. This was such a pleasure, and I hope everybody loves this. Thank you, my friend. We'll see you soon.